Well, good weekend all. And let me start off on this metal market update by wishing one and all a happy holidays, Merry Christmas, Happy Hanukkah, and all the other parts that go with it. I'm in Chicago, freezing. We haven't even gotten to zero without wind chill all day, and we've been averaging about 35 below zero with the wind chill. I was going to go outside to move some of the snow. One of my neighbors did it for me on the main sidewalk. We get fined in the city if you don't shovel. But I didn't do my private one leading into the house from the street, and I'm not going to tomorrow when at least I have single-digit weather. I think you'll see that makes sense. If you watch football, you're going to see the Bears play in this. You'll see how cold it is. I think we're going to be about 7 to 8 degrees, 10 degrees, but the wind chill where they play can be very nasty, so people are going to freeze. Won't be, I think, much of a passing game, so we'll see what happens there. But what do we do with these markets? Well, understand it's a holiday week coming up. You're not open on Monday for normal trade. You will be opening Monday night again for the markets, though. Remember that. The electronic markets will open. Then you'll trade through a good part of the week after that. We have then the New Year's Eve holiday coming up, and life goes on at that point. So it gets very exciting the week after because it's everything behind us, and now we start really getting involved in the market. Before I get any further in this, and we'll go into the markets now, and this is your weekly edition, I want to remind you for the last time that if you're interested in taking my brand new course, the Outside Day course, and getting the discount that I'm offering on it, this is the time to do it. It ceases the sale on Sunday, and it'll be over by midnight Central Time. After that, not interested in what your excuse was for not getting it. This is a great course. Why? Because you're going to learn how to work with the patterns of outside days up, down, what they mean. It's a continuation pattern. What happens if it doesn't continue? How do you recognize it's not continuing? I'm going to give you examples in stocks, futures, and ETFs for both the outside day up, the outside day down. Then I'm going to give you 2 weeks access to all my research. Everything that I offer for free will be included in it, and a month's worth of my full charting software. So if you haven't used this charting software, try it. I think you're going to be blown away by what it does. You know, when I go to the services and people say, well, they're giving me this charting software for free. They're not giving you this value of a software. I see what they're getting. You think I don't have trade accounts with different brokerage firms for my stock account? Come on, I do. All right, so I see what they give. You're talking here to here by design. The moment you want to step up at the different firms to their better charting software, you're going to pay for it. Well, we throw this in for you. We want you to see what it is. The value of these two is more than the course with the discount that I'm offering for Christmas. The course is normally $120. What are we taking it to? $90. So if you're truly interested, this is the time to do it. You need not start the course now. The course will start when you tell us to start it. So you buy it now. You may not want to take it till February. It's absolutely fine with us. You notify us when you do that. After you buy it, we'll contact you, tell you how to get hold of us, tell us when to turn the course on, away you go. You want to give it away as a gift, you can do that as well. We'll work with you in every way. But I think you're going to learn something. If you liked the Enhanced Bollinger Band course, I'm pretty confident you're going to like this one a lot too. All right, so let's go back to the market. And by the way, how you get there on the website, you can also move your cursor up here at any time during the video. That'll do it. Or just go here and go to education. Calling us won't do you any good because my staff's gone for the holiday. By the time they return, the sale is over, so that part won't work. Okay, so let's take a look together and see just what we do have in these markets. Well, today was a day of green. I think you'd agree with me, more or less. Everywhere I'm looking, it was a pretty good size up day. I think trying to make heads and tails out of trading just before Christmas, not a lot of sense to it. Next week will make more sense as people will close their books up for the end of the year. A lot of money managers get paid, remember this, by how they do. And it's at year end that it determines it. Now, if they have to chase the market to make their year end, they're in bad shape. If they've got it, they're not going to let go of the good things until the very end to book them. Now, there's two ways. Sometimes it's just marked to the market at the end of the year. Sometimes it's got to be closed out trades. Everybody works a little bit different. In the gold market, we've had a bounce back right to the neutral spot on a monthly chart, right back to the 18-month moving average. You're going to discover, if you take my full charting course, when you go to education on the site, you'll see the different courses, how this all works. And you'll say, well, how come he keeps saying those red lines and we keep going back to them over and over? You'll see it in the course. On the weekly chart, we have upside momentum. When the market is over the 18-week average of closes, it's got upside momentum. When it's under it, it's downside. It's a filter on the swing line. So you get a chart, you put a swing line study on it, and the swing line helps you go with the concept of where is a low, where is a high. An uptrend is universal. An uptrend is typically defined as making higher highs and higher lows, plural on both. Higher highs, higher lows. You can see just what the chart is doing there. Now, as the market starts working with that, and you go and you look and see the relation to the 18-week average, it is saying, yes, you have a buy signal, the bias is up, you can go with that. What do I also teach you? I teach that the first challenge of a major moving average is often, not always, but often, going to be a resistance point. You have it there, and you have it at the Bollinger Band. When they come together, as they did right through all this, that is a serious resistance point. It's not a turn of a trend. It's a resistance point where you look to see what's your momentum doing, because the market has upside momentum that did not embed. There's a way to handle that. Do you take off part of your position, all of your position? I teach that in the Enhanced Bollinger Band course. When I look at the gold-silver ratio, I have been on top of this for you the whole year. And this has been a wonderful way to play it from the bigger point of view. When you're under this average, you want to be long the silver. How many times have you heard me here, for those of you regular viewers? These are the amount of ounces. You have your shopping cart, you're going down, and you're filling it up with silver to go to your friendly, the word is friendly, coin dealer, who's going to say to you, I like you so much, there's no commission. Right now, the difference in the market is 75.57. I need 75.57 ounces of this silver to give you 1 ounce of gold. That's it. Well, it used to be 96, so now it's down to 75. Obviously, silver gained value. When you look at the silver chart, that chart looks stronger than the gold. You're in an area where the market is fighting its battle between the 100-day average and the upper band. I always teach to take some money off the table there. But do we have an embedded reading? Both numbers here are over 80. The week before, both numbers were over 80, and the week before. So you know you're embedded. What portion of the market do you liquidate the silver? Take the course. In the copper market, you have an overbought market, or what? Do I like to use the word overbought on weekly charts? Not really. I like to say it's used a lot of its buying power. So you have market that's higher lows, higher highs, into the big resistance of that number. What is copper trying to set up? It's trying to set up China. One thing, China, coming out of the COVID. Now, China's getting into the worst element of COVID that it can right now. The country's been allowed to go, and the government saw that once they had those, if you will, I won't call them riots, protests in the street is the right word, where people refused to stay in their apartments, they refused to listen to the government, they took to the streets, and give President Xi, at least he understood it, this wasn't worth the fight. The people have had too much after 2 years. They're better off getting ill. Those that have to die just the way they do in the West. Get them vaccinated. You don't have to lose as many people. And get Western vaccines, which he refuses to do. Even this week, Anthony Blinken offered, we will give you our vaccines. I mean, they won't take it because of the save a face. Our products are better and we'll stay with what we have. I get it, not knocking that. But the reality is, now what copper is looking at is, when does this wave end? And when it ends, the one thing China's about to do is throw money at their economy. and copper will be a recipient. Roads, apartments, they have to finish this property nightmare that they have. All the other things. The question that you have to balance is how much copper do they have on stock that's not being used, and what will that demand look like? We'll let the charts tell us, but the charts are bullish, a little ahead of themselves. I think the pros came out here when you were overbought, and I don't think they came back in, but I think they have a bullish bias. In the platinum market, you get up to the 100-day average in the Bollinger Band, you come out. You're not embedded. Goodbye, so long. Dollar index, I'm still very much in the bear camp. Now, you haven't embedded. You're trying to. As you can see, both numbers were under 20 this week. Last week, both numbers were under 20. This is going to be the key week. If it can get down and under it on this one, then you get that big enhanced Bollinger Band way to go with the market, and away you go there. So you look at it all, you put it together, you try to come up with a game plan, and I think we have them for you. So if you'd like to get, again, that course, this is your last shot at it. You're not going to hear me talk about this price again because it's over on Sunday, Christmas Day. Move your cursor up to the top here. It'll take you to the area. You can buy it. Take advantage of the pricing, and you tell us when you want to start it. I don't care if it's March. I don't care if it's February, January, whenever you want to do it. I'm Ira Epstein. You have a great weekend, a great holiday with your family, and I'll see you all come Tuesday.